Hi everyone, this is Am. Today I'm going to share with you a topic that a lot of my clients ask me: how to invest, use other people's money to finance their property. I'm going to show you straight away. Let's dive right into it. Let's wait 1 second. I'm going to share my screen. All good things need to wait, huh? Okay, we are almost there. My neighbor's doing some renovation, so there are additional sound effect. I'm not going to repeat the title itself. You can read it over here. But what I'm going to share here is actually not for everyone. Everyone's risk appetite is different. So just run through with us. We have our tailor-made MD&I process to work through your financial plan. Just a little bit recap if you have not watched my previous webinar. This is our URA property price index. The new low, which is over here, it's always higher than the previous low. So we always see an upward sloping trend. Okay, so this is what is happening in our Singapore property market. If let's say you have 300,000 cash, or maybe CPF, let's say 300,000 cash. If you do nothing, what would happen to it in the next 5 years? Of course, it'll be 300K. But depreciation, inflation kicks in. The $300,000 5 years ago is lesser in terms of value, right? If you put it in fixed deposit, what happened? 1.5%, you get 22,500 in 5 years. Is it a good number? All right, we shall see. Stock and share. A lot of my clients say, hey, this is the best time to go in. Property have dropped, the share prices have dropped so much. I'll share with you in the next slide. How about REITs? REITs itself traditionally about 6% rental yield, but now it's going to be very challenging. Yeah? How about the last of all, we have property, which is we use our OPM concept, other people's money. Okay, now stocks. If 5 years ago you enter the market, is around here, right? So it will be roughly the same price as now because the stock prices have dropped. So as you can see, it doesn't have the similarity like what the property prices are. The new low is always higher than the previous low. So stock market can go down or even lower, depending whether the company is making money or not, or doing well or not. Here we have UOB. Of course, you say that, wow, we also have dividends. Yes, we also have dividends, traditionally about this percent, 5 to 6%. Let's see. Okay, now you have 300,000 cash. If you were to put in the property, how would it look like? Let's say, for example, you can rent it out at 2007. You have a money mortgage of 2006. So net, you have about $100 gain passive income every month. Of course, the mortgage itself is P plus I. So it's about the principal sum repayment is about 1,650. 938 is an interest expense. Okay. So you do 1,650 times 12 times 5, you get 99K, which is over here, right? If you do the passive income 112 times 6 times times 5 times 12, you get $6,000, right? So what is your down pay? $1 million property, 25%, 250K plus about stamp duty 25K is about 275. Here we are talking about concept. We are going to ignore some of the miscellaneous costs like property tax or the so-called legal fees and all those. So if those are minimal costs, where as long as the whole concept works, it makes sense, right? So if sum up these three numbers, you will get 205. Over 275, you get 74%. This is our ROE, return of equity, right? So if you say, hey, this is for 5 years, what is your percentage look like in 1 year? Divided by 5 is about 14%, which is right over here. Good or bad? Okay, let's say, wow, property don't move. The price don't move at all. Jialat. Let's say if you don't move, you buy 1 million, still at 1 million. Okay? Your principal sum 1650 is paid by your tenant. So 1650 times 12 times 5 is about 6,000. Sorry, about 99k, which is what is above the passive income. I'm not going to repeat. 112 times 12 times 5 is about 6k. So total you have 105. Again, ROE, you paid 275. You have 105 over 275 over 5 years is 38%. Good or bad? Divide by 5 is about 7.6%. Good or bad? Right? Okay. So now it says, market not doing well, drop by 10%. How does the number look like? You drop by 10%, you lost 100k. But your principal sum is paid by your tenant. So your 99k still stays, your passive income still stays because you have tenant. Your net is about 6k. So 6 over 275, you have about ROE of 2%. Divided by 5 is 0.4%. You say, and where do you get such property? Are you sure you can get it in Singapore? We'll go right into it. Okay, the key. Just remember the number. 1709 275 at 1.05 million. Okay, 1.5%, 30 years. Your mortgage about 2.7k. Rental 2.9k. Where to get 2.9k? Passive income 182, principal 1733, and then we have 985 in terms of interest. So you break up these two, your P plus I, right? Your principal sum times 12 times 5 is 103 over here. Let's say the property prices goes up by 10%. 100k gain, 100k principal, passive 10k. So it's about 218 divided by 290. This is your ROE, about 75%, similar to the numbers over there. Divided by 5 is 15%. Is it good or bad? I leave it to you. Let's say don't really move. Don't move at all. Stay at 1 million. No gain. Principal sum, stick to 103. Passive, 10k. So 113 divided by 290 is about 39%. Divided by 5 is about 7.8%. Is it good or bad? I leave it to you. Let's say market not doing well. Drop by 10%. So you have a less 100k. Your principal repayment 10k. You have passive 10k. So net you have 13,000 over 290. So that will be about 5% for 5 years. So you divide by 5 is about 1%. Is it good or bad? So you say, are you sure you have such property? Let me just stop share here and zoom in into the public data to let you take a look at it. Okay, guys, you have seen this as the square foot, which is the URA data. I have already taken the data from the key. So as shown here, so to start the process. So let's zoom in. This is a 312 units development at town area. Let's go into the rental sum. Okay, the lease start in October. There are this. The latest one is 500 to 600 square feet, transacting at 2009. So just now you see the number, our square feet is 527 square feet. So usually within this range at 2009. So we have a. So how about the property prices? Are you sure? Okay, we have here 1709 transacted December 2019 at 1 million. You also have a smaller unit transacting for 950. Let's say you are using 950 to achieve the same rental. How does it sound? Sound good or bad? Let's recap. Okay, I'm going to share screen again. Just hang on a second. Okay, now we come to the recap of what we have learned so far. I hope I add value to you and show you how investors think in terms of using other people's money to finance their property free of charge. So after 25 years, if this model works the same, this property is free for you if you invest the right property itself, right? So I like people to take actions. I'm going to give my 7M cheat sheet to you. So this will give you an idea how the investor think in terms of selecting the property itself. Do not hesitate to contact us to run through the D&I process with you, as this will help you to understand what is the right entry and what is the right exit point that you must have, and whether this is a good property for your retirement. I'm signing off. Thank you so much for watching. Bye bye.